Hi everyone, and welcome back to The Independent Dollar. Today's video is a quick tutorial on how to instantly increase your investment returns and lower your fees on products that you already own. If you're currently doing all of your investing with your local bank, then you're probably no stranger to mutual funds and GICs. And today's video isn't to try and encourage you to stop buying these products. That being said, you may or may not be aware that there are fees attached to those investments. With mutual funds, those fees are referred to as management expense ratios, or MERs. On top of that, there are additional fees that are layered onto those products to cover the cost of providing you with value-added advice. If, however, you find yourself buying and selling those investments on your own, then you may be paying for a service that either you're not receiving or you don't need. For those of you that are in that situation, I'm going to show you how you can easily bypass those fees so you can continue to own those investments, but at much lower fees and higher annual returns. Let's start with your mutual funds. Just a word of caution though, I don't own these funds, this is just for illustration purposes, so I'm in no way encouraging you to buy or sell these products. When looking at mutual funds, you may or may not have noticed that they actually come in a variety of series. The fund is the same, but the price attached to each series is different. How and where you purchase that fund will determine which series you get. At TD, for example, if you're purchasing your mutual funds at the branch, then you're buying Series I funds. In this example, the MER is 2.03, and that fee includes the cost of everything needed to manage the mutual fund, as well as that added layer of service and advice that we mentioned earlier that you receive from the branch. If you prefer to invest on your own though, and you don't want that added advice, then you would probably be better off purchasing a different series. In this case, with mutual funds, you want to look for Series D. As you can see here, the fee is substantially lower at 1.2%. By purchasing the same fund but in the D series, you've instantly reduced your fees by about 40%. And this doesn't just apply to TD. Each bank has their own versions of their branch full-service funds and their D series funds. At RBC, for example, their branch funds are Series A, and as you can see here, for this product, the branch fee would be an MER of 1.76%. With the D series, it's 1.05%. Again, another 40% reduction in fees. To put this into perspective, let's say you invested $100,000 into a mutual fund with an MER of 2%. At an average rate of return of 5% a year, after 20 years, your investment would be worth close to $265,000. Owning the same fund in the D series, though, would mean your investment would be worth closer to $310,000 instead. That's a difference of almost $45,000 just by lowering your fees, but owning the exact same product. With D-Series funds, you can't purchase them at the bank, but you can purchase them online through an online investment account, also referred to as a discount brokerage account, which can be set up with your bank that you currently deal with now, or whichever brokerage you prefer to use. Once your account is set up and you're logged in, finding the funds are as easy as doing a quick search in the search bar as you can see here. The same thing also applies to GICs. Let me show you what I mean. If we head back to the BMO website and pull up their GIC rates, you can see here that a one-year GIC is 0.45%. If we head back to our online investment account, a one-year GIC at the same bank is now priced at 0.61%. However, we can see all the rates from a wide variety of banks now, and you can get as high as 0.81%. Almost double the rate that would have been offered to you had you walked into the branch of your own bank. Keep in mind that online investing through a discount brokerage account is completely self-serve. You can get help finding products or placing trades by calling them, but the risks associated with buying and selling investments will lie solely on you. Hopefully you found this video helpful. Thank you so much for watching, and we'll see you next time.